One thing I love about investing in multifamily real estate is passive income. You put good tenants in your buildings, they pay their rent. You oversee the operations of the building, keep your expenses at a reasonable level. You pay the mortgage on the property. The leftover portion is your cash flow or your passive income that gets distributed to investors. What a great way to supplement your day-to-day active income. One of the most powerful aspects of investing in multifamily real estate, appreciation. So there are many tax benefits that come with it. You can deduct operating expenses, interest on your mortgage, but most important to me is the ability to accelerate the depreciation loss that we show on paper. Oftentimes we'll show a loss on paper while we're receiving positive cash flow in a given year. It's a very powerful tool. Another aspect of multifamily investing that I love is what's called value add investing. What that means is basically you look at a building that might be underperforming. Maybe rents are below market, maybe expenses are higher than they could be. It might just be a poorly run building. You put it all together. When you take over ownership, you make improvements, you get rents up to market value, you bring expenses down to a more reasonable level, and now you have a higher net income for the building and therefore a higher value. Another aspect of multifamily investing that's important for passive investors to consider, diversification. When I was brought up, the most common ways to invest were stocks and bonds, mutual funds, and that's fine. There's a time and place for that. I'm not here to speak about any of those things. All I do is real estate. So I would recommend, hey, is there a portion of your portfolio that you can consider for passive investment in real estate? Another powerful aspect of investing in multifamily real estate is the ability to use retirement funds to invest and build your passive income through that source. So if you have an existing traditional or Roth IRA, or maybe you have an old 401k or retirement plan with a previous employer, you could potentially roll those over or transfer them into what's known as a self-directed account and use those funds however you please in a variety of different asset classes, including multifamily, a great way to diversify your portfolio. Another aspect of multifamily investing that I appreciate is appreciation, building wealth. And there's three main ways that you can do that. Number one is market appreciation. And guess what? We have no control over that. The market goes up, the market goes down, outside of our control. There's forced appreciation, where because commercial buildings are valued based on the stream of income it produces, if you could increase your net income of the building, the value goes up higher as well. And that might even offset a market downturn. Market goes down, but you're forcing the appreciation by increasing the income to offset a market downturn, what you can't do in single family investing. And then finally, you have your principal pay down. Your tenants, your residents are paying their rent. You're paying the principal on the loan. The mortgage balance goes down. Your equity or your wealth goes up on paper. Another aspect of multifamily investing that I appreciate is how buildings are valued. So if you think about a single family home, it's valued based on what other homes like it have sold, comparable sales. Multifamily is somewhat different. It's based on the stream of income that your building is generated, divided by what's called a cap rate, or the market's general expectation of return for that given location, that given age of the asset. So if you can increase that stream of income, you are increasing the value of the building, regardless of what other buildings that size have sold for. It all comes down to that stream of income. An aspect of multifamily investing that is empowering is the ability to use OPM, or other people's money, a term that many of us have heard of, but what does that mean? You have the ability to purchase assets larger than you might be able to buy on your own through a process called syndication, through joint ventures, where you're raising capital, other investors, and together you're buying a larger asset. Another aspect of multifamily investing that I find to be powerful is what's known as economies of scale. So I'll give a simple example of what I mean by that. And that could mean different things. But to me, I look at my single family rental homes. And if I have 1 month of vacancy, I am out 1 month of income, which could completely wipe out the cash flow for the entire year, or a good portion of it. If I have a 10-unit building and 1 unit is vacant, I still have 9 paying tenants and still more than likely covering my mortgage, my expenses, and have positive cash flow. An interesting aspect of multifamily investing is what's known as a low barrier to entry. So think of it this way. You're purchasing a 10-unit, 1970 built building. If you see down the street, there's frames going up and they're building a brand new 10-unit apartment, do you think that's competing with yours? Indirectly, maybe, but if you think about it, the cost to build that building means that the owner of that has to justify the highest rent possible in that market. So a Class A building isn't really going to compete directly with a Class B or C building that's an older vintage. So really, you're limited to competition with the other buildings that are of similar age to yours. An attractive aspect of multifamily investing to me is the financing options that are available. So with multifamily, when you usually get to a loan value of $1 million or higher, then you're dealing with 30-year amortization in most cases with agency debt, Freddie Mac, Fannie Mae, 30-year amortization compared to 25 for many local and regional banks, a longer interest-only period available, fixed rate. You have the ability to leverage other individuals' net worth or liquidity, the money they have in the bank, and qualify together for these larger loans if you can't qualify for it on your own. I find them to be very flexible and pretty easy to work with.